We've been digging through the numbers all morning. Who's the big winner? Why? How? More importantly, is it sustainable?
Sure. I think when you take a look at the numbers that we've seen so far between JPMorgan, Citigroup, and Wells Fargo, the two winners are JPMorgan and Citigroup. JPMorgan's numbers were even better than Citi's in terms of beating expectations. But the common theme for both of them is that they had very strong consumer banking results and capital market results. So I think this bodes well for Bank of America when they report numbers tomorrow. So those are the driving factors in this quarter's numbers. And is it sustainable? I think the consumer business is, because look at the unemployment rate came out last week, 3.5%. Wage gains are close to 3% year over year. Record employment. So the consumer lenders, I think 2020 could be their year in the sun.
What about, we talk about the margin expansion and a little bit of compression, mild compression, I think was the word that they use over at JPMorgan. Is that a concern for you at all, Gerard?
It's a good point, because that was the big concern in the summer coming into the fall. As the Fed cut rates, deposit rates took a little longer to fall. But as the Fed now has paused, deposit and funding costs are falling faster in many cases than asset yields. So the pressure is easing up. We expect it to ease up a little further in the first half of 2020. Now, what's going to be interesting is if the yield curve steepens, if we get to a 210 or 220 10-year by the end of the year, that's going to be beneficial to the margin. And you could see possibly margins improve in the second half of the year if we get a steeper yield curve.
Gerard, what about loan reserves and sort of how much money these banks have said they had to set away for bad loans on the consumer front or otherwise?
You know, it's interesting because this quarter, credit was even better than expected on all three banks. And so I think what you're going to find is we have a new accounting treatment called CECL that's coming into play. The day one reserves, as we refer to it, are not a big issue. But credit coming into 2020, very strong. And once again, you know, the banks learned their lessons in 08 and 09, so the underwriting standards are stronger. A lot of the risk has been pushed into the shadow banking industry. So I expect the banks to maintain good credit as the economy remains strong in 2020.